Welcome to TRN Podcast episode 120. Today we're looking at a set of reports focusing on, well, the escalating trade tensions between the US and China.
And the ripple effects, right, across quite a few industries.
Exactly. We've got articles on China reportedly telling its airlines something about Boeing, Nissan cutting production in Japan, warnings from the Fed.
And also the U.S. government starting investigations into chip and pharmaceutical imports.
You shared these sources, and the plan is to really try and understand the key developments and what they signal for the global economic picture.
Yeah, what's striking is just how interconnected it all is. One action seems to immediately trigger a reaction. It feels very dynamic right now.
Okay, so let's try and untangle some of this, starting with Boeing and China. The report says China told its airlines to stop taking new Boeing deliveries. That sounds significant.
It's definitely a major step. According to Bloomberg, it's seen as a direct response to the ongoing trade dispute.
And it goes further, doesn't it? Something about parts.
Yes. They've reportedly also been asked to stop buying aircraft parts and equipment from U.S. companies. So it's not just about new planes.
And the Chinese government might even step in to help its own airlines, the ones leasing Boeings who face higher costs now.
That's being considered, apparently. It shows they're aware of the impact on their own industry, even as they apply pressure.
Makes sense. It's a balancing act.
Definitely. And there's this detail about 10 737 MAX jets that were apparently close to delivery, some even physically in China already.
So the question is, do the new tariffs hit those specific planes? Does it depend on when the paperwork was done?
Precisely. That part's unclear, but it highlights the immediate practical issues involved.
And China is just such a massive market for aircraft. What are the estimates? 20% of global purchases?
Something like that, yeah.
Right.
Up to 20% in the coming years. So for Boeing, losing access or facing restrictions there is, well, it's a big deal.
And this isn't entirely new, is it? Weren't there already issues with the 737 MAX crashes and previous trade disputes pushing China towards Airbus?
That's right. There was already a trend favoring Airbus for new orders. This reported directive would likely accelerate that shift quite dramatically.
Though Boeing still has existing orders from China, right? About 130?
Yes, around 130 firm orders, which, compared to their total backlog of over 6,300 jets, might seem small.
But still significant for that specific market relationship.
Absolutely. And looking ahead, over the next 20 years, China's expected to take delivery of about 20% of all large commercial aircraft globally for fleet replacement for growth.
So it's a crucial long-term market they really can't afford to lose ground in.
Exactly. And the impact isn't just on Boeing. Think about their U.S. suppliers.
Right, like engine makers, GE Aerospace, and RTX.
Precisely. Their components are key parts of Boeing jets. Fewer Boeing sales to China means fewer orders for them, too. It's that supply chain ripple effect.
And unlike some other tariffs, these China tariffs, the 145% ones, weren't suspended for 90 days.
No, apparently not, which signals a harder line, perhaps.
Okay, let's shift gears. What about Nissan? They're cutting production of the Rogue SUV in Japan.
Yeah, that's the report. Reducing production of their U.S. bestseller at their Kyushu plant, specifically because of U.S. import tariffs.
So a direct link again? How much are they cutting?
Expected to be about 13,000 vehicles between May and July. They'll reduce working hours, even halt lines on some days.
And future production levels depend on Trump's tariff policies.
That seems to be the message. It highlights the uncertainty businesses are facing.
The Rogue is a big seller for them in the U.S., isn't it?
Huge. Over a quarter of their total U.S. sales this year so far. 62,000 sold in the first 3 months. It's their top model there.
And they build it both in Japan and in the U.S. in Tennessee.
Correct. Smyrna, Tennessee. So cutting production in Japan is clearly a move to mitigate the impact of that 25% import tariff on cars.
Which has been in effect for a couple weeks now.
Right. Though President Trump did mention possibly looking at changes, acknowledging manufacturers might need a little more time.
A potential softening or just talk.
Hard to say. It adds another layer of uncertainty, really. Doesn't mean exemptions, delays. We don't know yet.
Okay, now let's turn to the U.S. Federal Reserve. We have warnings from Christopher Waller. Pretty strong language, calling the tariff policy one of the biggest shocks in decades.
Yes, very strong words from a key Fed official. He emphasized the impact is highly uncertain, which in turn makes the whole economic outlook highly uncertain.
And that means the Fed has to be, what?
Flexible?
Exactly. He said it necessitates a flexible approach to monetary policy because the path ahead is so unclear.
He laid out two possibilities, right? Either the Fed cuts rates to prevent recession, even with high inflation,
Or the tariffs turn out to be more of a negotiating tactic and don't have much lasting impact.
So the Fed's basically caught waiting to see which way the government jumps.
That's the dilemma Waller highlighted. The unpredictability of the policy direction makes their job incredibly difficult right now.
Then there are these new U.S. investigations into pharmaceuticals and semiconductors.
Yes, formal investigations under Section 232 of that 1962 trade law, the one that allows for tariffs on national security grounds.
That's the one. So this could potentially lead to more tariffs framed as a national security issue.
What's the process there? A comment period.
A 21-day comment period after it's published in the Federal Register, which was expected Wednesday. And these investigations have a deadline 270 days from announcement.
And this isn't the first time Section 232 has been used recently.
No, the Trump administration previously used it for investigations into copper and wood imports. So there's a pattern emerging.
Meanwhile, the EU is trying to find a solution. EU Trade Commissioner Efishovich is in Washington.
Yes, seeking a resolution. He mentioned a 90-day window to sort out what the EU calls unjustified tariffs.
Is there hope there?
Well, the EU says it remains constructive and ready for a fair agreement, but stresses it needs significant joint efforts from both sides. So diplomatic channels are open, but it sounds like a tough negotiation.
And back to President Trump, he also hinted at possible temporary tariff exemptions for automakers.
He did, acknowledging they might need more time to adjust supply chains to source more parts domestically.
But vague on the details, like who gets them or for how long.
Very vague. He said he's examining how to help some manufacturers, but no specifics. Remember, there's already a 25% tariff on imported vehicles, and component tariffs were due in early May.
This sounds a bit like the exemptions for electronics, like smartphones and laptops that benefited Apple.
It does resemble that situation. Those exemptions from the additional 125% tariffs were significant for companies like Apple.
But those were temporary too, right? And expected to fall under planned chip tariffs eventually.
That's the understanding, yes. Temporary relief, not a permanent removal. It's complex.
Trump mentioned talking to Tim Cook, Apple's CEO, and being flexible. I don't want to hurt anybody, he said.
Right, which suggests a willingness to make case-by-case adjustments, perhaps based on lobbying or specific circumstances, rather than a broad policy shift.
Interesting dynamic. Okay, let's look at China's relationships elsewhere. They seem to be strengthening ties with Vietnam.
Yes. Amidst the U.S. trade conflict, President Xi visited Hanoi, signed 45 cooperation agreements covering everything from agriculture and customs to AI.
Strengthening supply chains between them.
That was a key theme Xi emphasized, building stronger links between the two communist nations. He also wrote an article saying there are no winners in trade wars, though without naming the U.S.
A clear signal. She's also visiting Malaysia and Cambodia.
Part of the same regional diplomatic push, it seems.
Even OPEC is adjusting forecasts. They see slightly weaker global oil demand growth, partly because of these new U.S. tariffs.
That's right. They revised down their 2025 daily demand forecast slightly, by 0.1 million barrels. It's not huge, but they explicitly link it, in part, to the tariffs potentially slowing economic activity.
And the 2026 forecast was also lowered a bit. It just shows how far-reaching the potential impacts are.
Definitely. It touches energy markets, global growth perceptions.
Now, China's restrictions on rare earths, that's causing concern in the White House.
Yes. Kevin Hassett, a top economic advisor, called China halting exports of some crucial raw materials worrisome. The U.S. is evaluating options.
Why are rare earths so critical?
They're essential for high-tech manufacturing. Electronics, magnets for EVs and wind turbines, defense applications. China dominates the supply.
So restricting exports gives them significant leverage.
Potentially, yes. The reports suggest exports of rare earths and magnets were halted temporarily while Beijing develops a new export regulation system, one that might allow excluding specific regions.
And they'd already paused exports for companies without specific licenses back on April 4th. Licenses that are hard to get.
Right, taking about 45 days to process, so they're tightening control over these strategic resources.
And President Trump is expected to announce the tariff levels on imported semiconductors soon, within the next week.
That's what he indicated, yes. Again, hinting at flexibility for some companies. We'll have to wait and see what that actually means.
And he also clarified those earlier exemptions for electronics weren't really exemptions.
Right. He described it as moving them to a different bucket, still subject to what he called the fentanyl tariffs of 20% on imports from China.
That terminology just adds confusion, doesn't it?
It certainly doesn't simplify things for businesses trying to navigate the rules. It suggests multiple layers of tariffs might be in play.
Okay, other countries are reacting too. The UK announced more financial support for its exporters.
Yes, a $20 billion increase. Finance Minister Rachel Reeves specifically mentioned helping UK businesses navigate challenges, particularly those affected by U.S. tariffs.
So governments are trying to cushion the blow domestically.
It seems so, recognizing the potential disruption from these global trade shifts.
And the World Trade Organization, the WTO, basically says tariffs don't work as intended.
Their chief economist, Ralph Assa, made that point. Tariffs mainly raise domestic prices of imports, affecting prices, wages, exchange rates, trade flows, not necessarily boosting the domestic economy in the way proponents hope.
A basic economic point, but maybe one getting lost in the politics.
It often seems that way. Short-term political goals can sometimes overshadow longer-term economic consequences.
Taiwan also reacted, extending restrictions on short selling because of stock market volatility linked to U.S. tariffs.
Right. Trying to curb speculative trading and maintain market stability. Their market's down about 15% this year amid the trade dispute.
So real financial market impact there.
Definitely. And they've apparently held initial talks via video conference with U.S. officials about tariffs, reciprocal tariffs, non-tariff barriers, export controls, the whole range of issues.
A first step, perhaps. Now, President Trump's comments on U.S. bonds, he dismissed the recent drop as a small moment he fixed quickly.
He did say that, yes.
Yeah.
And predicted the dollar would strengthen once people understand his policies.
But the market reaction was different. Investors kept selling treasuries, the dollar index fell.
Exactly. There's a clear disconnect between his assessment and the market's behavior, which suggests investors remain nervous and unconvinced.
German industry is worried too. The BGA, their Foreign Trade Association.
Yes, significant concern there. President Dirk Janduro warned about the tariff spiral, disrupting global trade and harming everyone.
And they worry about Chinese overproduction flooding Europe.
That's a specific concern, that if Chinese goods can't go to the U.S. easily, some of that excess production will end up in Europe, hurting local producers. They called for EU intervention if competition gets severely distorted.
Then we have the IFO Institute in Munich, Clemens fused, warning a world economic crisis cannot be ruled out. That's serious.
Very serious. He doesn't think U.S. tariffs alone would trigger it, but the spread of protectionism in China and Europe is a great danger.
He also criticized the U.S. for damaging its reputation as a reliable partner.
Right. And he linked the recent suspension of some U.S. tariffs to the falling value of U.S. government bonds, calling that an alarm signal for the U.S. and the global financial system.
Because the U.S. stock market and the dollar are so central.
Exactly. He warned of incalculable consequences if those pillars falter.
But the Boston Fed president, Susan Collins, offered some reassurance, saying the Fed is ready to ensure markets function.
Yes, she stated the Fed has the tools to address market functioning or liquidity concerns if they arise, and they've used them rapidly before, a standard central bank assurance in times of stress.
We also saw sharp criticism from economists. Paul Krugman calling Trump's policy the third worlding of America.
Yes, arguing that crazy policy has shaken investor confidence in the U.S., traditionally seen as a safe haven.
And Larry Summers apparently echoed that, saying bond investors are treating the U.S. like an emerging market.
That comparison carries a lot of weight. It suggests a fundamental shift in how some influential observers view U.S. economic stability and policy predictability.
Finally, a perspective from Germany again related to Volkswagen. Stefan Weil, premier of Lower Saxony, where VW is based.
He seemed to downplay the significance of the U.S. market for VW, acknowledging they'll be affected, but stressing the importance of other markets.
Like China.
Especially China, which was VW's largest single market in 2024, ahead of the EU and the U.S. It highlights how global companies might reorient if trade barriers rise in one major market.
So a lot of moving parts, a lot of reactions.
What's fascinating here is the interconnectedness of these events. We see a direct response from China to U.S. tariffs impacting a major American manufacturer, ripple effects causing production adjustments in Japan, and significant concerns raised by economic authorities about the broader stability.
It really paints a picture of rapid escalation and global impact.
If we connect this to the bigger picture, it underscores how trade policy decisions can rapidly translate into tangible consequences for businesses and the global economy. This raises an important question for you. Considering the diverse reactions from different countries and sectors, what do you see as the most significant long-term implication of this evolving trade landscape? It's a complex picture, and the insights within these reports offer a crucial snapshot of the current dynamics at play.